Hello, my name is Nicole Elliot and I'm a technical analyst and private investor. And this week, as three important US indices hit new record highs, or rather inch to marginally new record highs, there's a lot of media hype going on. And I just wanted to remind you that just because something's at a record high doesn't necessarily mean it's bullish. I mean, on the US indices, there's loads of divergence with the relative strength index, this, that and the other. Because I'm often accused of being a perma bear, I thought I'd do a really proper, thorough job of trying to bring to you three important indices that really are still looking bullish, albeit they may see a shallow correction over the next 3 months. My first one is not this year's best performer, which is Argentina's Merval. That's up 38% since January. But you've had a whole load of currency depreciation. This one is the better bet. It's Brazil's Bovespa index. And as you can see, it's put on a real spurt inside a trend channel since the very beginning of 2016. This one is up a very respectable 14% this year, and its currency, which had weakened by 8% against the US dollar, has reversed all of this and a bit more, and it's now 1% stronger against the US. In fact, it's one of the best performing currencies year to date. Reason for this is that the lower house of Congress just recently passed the first stage of approving massive pension reforms, which are drastically needed in Brazil. So we've hit the top of the trend channel. Let it pull back a little bit. You've got first support at 99,000 and then at 93,000. Any dip towards there, I would consider this a good buying opportunity. My second chart is similar. It's the Russia's MOEX index. It used to be called MICEX, now it's MOEX. But don't let that put you off. This one is since 2015, so we've got an extra year on this one in a trend channel. This year it's actually put on 16% in terms of the value of the stock index, and amazingly the ruble is up 9% against the US dollar. So I mean, that one you've got, you know, a whopping 25% return so far, which is rather nice and handy. It had been in a sort of right angle triangle, and the burst now over the last 3 months is really quite something, but it's definitely pulled in its horns. I would suggest that any dip down to the psychological 2,500 level, and I'm not sure that we'll even get there, but I think we might briefly, again would be an opportunity to look to buy into this one for the long term. And my final chart is the Dow Jones Utilities Index. Now this is a key tenet of Dow theory, which is the sort of bedrock of technical analysis. And Charles Dow postulated that when indices move, they must confirm each other. So we've got utilities, transports, and the all-important industrials. That's the one that most people look at. But then you want to look at the S&P 500, the NASDAQ, the Russell, and basically all of these ought to be singing from the same hymn sheet. Well, like the others, this one has been really rallying very steadily at a 45-degree angle across the screen since 2009. It's got a little bit more unstable really since 2016, with bigger lunges on the upside and then slightly bigger pullbacks on the downside. I've drawn in your Fibonacci retracement support levels to each and every one of these moves, and you can see that we're well supported. And while we've extended ourselves a little bit beyond, I think, where we should be over the most recent 8 weeks, I think the pullback is likely to be relatively shallow, in that all these are mirroring basically, it's a share masquerading as a bond. I mean, that's what you're looking at. And with the outlook for central banks backpedaling, well, that's about it, really.